So when I tell them about our preferred return structure, then, they're great.
Hello everyone, thank you for tuning in for another best ever short video. I'm here with Joe Fairless today, host of the Best Real Estate Investing Advice Ever show. We're shooting a series of videos, and the next question I had, because we just covered why you don't look at cap rates first and foremost when evaluating a deal. So kind of following that, you said investors will ask you what is the cap rate of this property before they want to invest, and it is a relevant question, but not the most relevant question. What other questions are potential investors asking you that someone who's looking to start reaching out to investors or speaking to people about raising money should be ready to answer?
Oh, there's a lot of questions. I mean, ultimately, it depends on. I'll give some specific ones in a second, but some context. The types of questions that someone asks you depends on their level of knowledge with what you do and with who you are.
Okay.
Because someone who knows you already and knows what you do and knows your business already, they're going to have fewer, more sophisticated questions than someone who does not know your business as well or doesn't know you as well. And that's the beauty of doing YouTube videos. That's the beauty of doing a daily podcast like I do. And and having books and things like that, because it shortens the learning curve. It helps people to get to know you better faster. And it makes for more informed, high quality conversations versus a get to know you, fill you out sort of conversation. Not that that doesn't take place with people, investors who listen to my podcast and stuff, but it's just a different level of conversation. It goes from if they didn't know me, oh, can you tell me more about your business? What do you do? If they're reaching out to me, or if we come across it that way, I know there's going to be it's a long road ahead for them to get familiar with me and my company.
Right.
Versus, oh, I feel like I know you. I listen to you every day.
Right. Yeah.
Okay, great. So now they know who I am, and now we can start at a further along level or a higher level. As far as questions go, I mean, some top of mind.
Yeah, maybe.
What can you tell me more about your company? Mm-hmm. What markets? Markets tend to be a topic that investors like to talk about. My opinion on that type of line of questioning is that until someone has a property in a particular market, I wouldn't spend much, if at all, any time with them if I was qualifying a general partner or a syndicator talking about markets, because it's just talking about hypothetical stuff. Right. And if the investor, if the general partner, the syndicator, is halfway knowledgeable, they're going to be able to say why they pick markets, right?
Yeah.
Pick it for job diversity, you pick it for population growth, you pick it for supply and demand fundamentals, you look at any economic indicators, just how many headquarters have relocated there, things like that. So, but markets do tend to be a topic of conversation. Also, can you tell me more about your team? Can you tell me more about yourself? Just, I would like to get to know you better. Can you tell me about some past projects? Can you introduce me to some of your investors? If they don't ask for that, then if they are still skeptical about you as a person, then I recommend proactively mentioning that you'd like to provide them with some references. I don't do that for everyone because not everyone needs the extra levels of validation, but some people might. And I'm always happy to give references for investors of mine. So those are some things that come to mind.
I'd imagine a big one would be, how am I getting my money back? Or what is your track record for paying investors back? So
absolutely. Yeah, absolutely. And then I'll get into the risks associated with what we do, because there are risks associated with what we do. It's an investment like anything else. You could lose your money. But we have some safeguards in place to mitigate that risk, like a preferred return, like buying stabilized cash flowing properties, and some other things. So that's certainly it. I mean, venture capitalists tend to ask about alignment of interests. So when I tell them about our preferred return structure, then they're great.
They're good with that. Yeah.
Others tend to get into the number. Engineers tend to get into the numbers and the fundamentals, which of the deal itself, which I don't think is the best use of someone's time, because if we have qualified a deal to the point where we're buying it and we have a track record and the alignment of interest in the deal are such that there's a preferred return, then I think it's safe to say that if we are good enough and we invest in our own deals, if we're good enough to put our own money into deals, plus we have a track record, plus we have investors in the deals too with us, so it's not just our money, it's investor money, then it's safe to say we know we've qualified it well enough. But I don't think engineers can help themselves. And they still want to get into the numbers and stuff, and that's fine. And perhaps it helps them have a higher comfort level based on how they internalize things. And I totally get that. And others look at just more getting to know the team. I've had one investor in Los Angeles. He wanted to meet me in person, and I said, "Great." He said, "Well, how's this weekend look?" And I said, "We're open. Come on over." So he flew from Los Angeles to Cincinnati like 2 days after our initial conversation. Had dinner at our house, and this is not typical, but we're like, "Sure, fine, I don't care. Yeah, come meet us. We're free this weekend." And then he ended up investing in our deals after we had that established relationship.
So you kind of know, when you mentioned the engineers, you kind of know going into a phone call or an in-person meeting, assuming you already know what profession they're in, you kind of have an idea of what questions you're about to be asked?
Yeah. There's always exceptions to the rules.
Of course.
Surgeons are incredibly methodical and ask as many, if not more, questions than engineers. Then entrepreneurs are more quick to make a decision, but they ask more questions that Malcolm Gladwell would ask from his book Blink, where he talks about thin slicing. And entrepreneurs tend to get to very relevant questions. Successful entrepreneurs who are accredited tend to get to very relevant questions, and then they get the answers that they want. Okay, great. Now I'm in. It just depends on the multiple factors. But if I were to generalize, I would say those are some generalizations.
It's good to know for people who haven't had these conversations yet and haven't figured it out, such as someone like me. And we'll cover that on another. I want to ask you questions you ask potential investors to qualify them, but let's do another video for that. So everyone, thank you for watching this video. For more tips like this, subscribe to the newsletter at bestevernewsletter.com.